the Trading Market Technicals Morning Call video for Thursday, February 20th. Well, we did get a lot of red across the board yesterday. Dow Jones down 89, Nasdaq down 34, S&P down 12, and the Russell down about 12 points, to almost 13 points. And we are seeing some continued weakness. Definitely have some activity in the pre-market session. Last night, China announced their flash PMI, and they have contracted again. And this is a new 7-month low. The S&P took a big tumble early on, has now recouped a little bit, but at one point we were down about 7 handles in the early morning session. Now we're down about $2.75, $3 in the E-mini S&P electronic session. So definitely some weakness. I've mentioned many times that China is definitely the canary in the coal mine. They are a big manipulator of their numbers as well, so you got to take everything with a grain of salt. But, obviously not good. We are getting some weaker manufacturing numbers here in the States as well as abroad. German just reported their PMI numbers, and they were also weaker than expected. So a lot of contraction, and that's not a good sign. So we're going to see, could this be the catalyst that we are looking for further downside movement? Not sure. But we did get an outside day reversal to the downside, which tells me that we could be looking for some further weakness, at least for the next, few days, few weeks. Remember, you got to keep in mind the overall picture continues to be up. Our trend remains intact, and the longer-term picture as well remains intact. We've been up now 11 straight days in a row, aside from yesterday. So it's logical for a market to have another pullback. I mean, lately the markets have been literally down, straight down, and then reversed back up and took back all of its losses from this current downtrend swing. So kind of crazy. Markets are definitely not user-friendly, so to speak. So you need to be really nimble. You need to know when to put on protection. Obviously, day trading, that's one thing. But if you are managing a portfolio, or if you're a swing trader, you need to expect to have a lot of exposure, risk exposure in the overnight session. Remember, in this segment, I'm going to show you why it's a must knowing what the other markets are doing, the Asia markets, European markets, because we do have a worldwide market. If one market sneezes, we get the cold, and vice versa. So we really need to be aware of our surroundings. Okay, so what I'm going to do in this segment, I'm just going to show you a couple of indicators. Indicators really are pointing to some further weakness. Now remember, I showed you the one thing on the chart with the spiders, the gold, and bonds. You have equity markets moving higher, we have gold moving higher, and we have bonds really moving higher or stabilizing. That is not going to continue. Something is going to give here. Usually they're inversely correlated to what equities are doing, bonds and gold. So when you have all three moving in same, something's not right. And to me, that's a big red flag. And like I mentioned the last few days, I wanted to point that out to everybody so we all can be prepared. If there is going to be some downside pressure, we want to be ready and able to act on it. Okay, so we have the VIX. And as you can see here, in the VIX, we got back above the 200-day moving average and the 20 in the Bollinger Band. So to me, there's some decent support here, and there's plenty of room to run, at least to fill in this gap resistance here. And if this thing does start to move, well, that's going to create some selling pressure in equities. Okay, take a look at the end-of-day tick. That's also a big concern to me. Follow the tick intraday and as well as end-of-day, and this is a concern here. Now that we are back below zero, let's see how long we stay below zero. Now, if we get one of these big pop back up again like we did here and here, and that's fine. But if we continue to stay below zero, that's what the end of the day tick is for. When we have internals starting to break down and now we can't get back above zero, that's going to be your warning sign. And now, obviously, all of 2013, you can see we reverted back up, one day down, back up again. So all of 2013, as we all know, was extremely bullish, and so did the tick readings. Down once and gets back above zero, not a big deal. But that's something that we want to monitor in the coming sessions. Okay, let's take a look at the U.S. dollar. Now, the U.S. dollar is breaking down here, as you can see from this ascending triangle. Now we have weakness here, and that's actually putting some strength in the commodity sector as far as gold, oils, grains. They're all moving higher because because the U.S. dollar is has a weakness, so that bodes well for the commodities group. Okay. Now, what I want to show you is the worldwide markets, right? Let's take a look at the EEM. Here's the emerging markets. And by the way, the Asia session, they got pretty much all red across the board, down significantly on this flash PMI reading. So, this is going to read tomorrow's data at the end of the day today. You'll see this back down again as well. So the EEM not showing any strength other than a retracement rally, still overbought. So there's some definite downside here. And as you can see, look at the volume. Again, heavy distribution here. So I think the emerging markets are really in trouble, and I think there's further downside to come in that area, in that Pacific Rim. Also, China. Now, China, this will be red at the end of the day today, unless something dramatic happens during the trading session today. This will be red as well. And as you can see, we have this horizontal trend line resistance, and we have the 200-day underneath it, as well as the 50 coming down officially. Hasn't crossed and made the death cross yet, but if that does, a lot of fund managers will see that, and that's going to be a big concern that there should be some continued weakness here. So China not looking too good. Now let's take a look at the European markets, right? You have the FTSE, the Financial Times. It is now basically topping, right? So if we look at all of this, and you'll see this is exactly the same pattern that we see. So we have the FTSE, we have a double top. The German DAX, widely followed by portfolio managers, hedge fund managers throughout the world. And this here is basically the leader in the European markets. There's no two ways about it. The DAX is the leader in the European markets. And now it has double topped, okay? Take a look at the SPX cash. Very similar pattern. It has double topped and put in an outside day reversal. Let's look at the MS World Markets. Now this is all combined. It has double topped. Okay, so it's going to need a catalyst to either break out and have all of our other European counterparts follow suit, or this will start to revert back down again. So the markets are at a conflection point here, and it's going to be a do or die. And if that does happen and we start to roll, all other markets will follow suit. Remember that, okay? We have one big market here. All right, now let's take a look at the E-mini S&P daily chart. As you can see, we have an outside day reversal from the previous day. That should have some continued selling. We did catch the 8 on the daily chart, and we're still overbought. Okay, and as you can see, what's happening? We have distribution. So not a good sign here, at least for a couple of sessions. Here's the hourly chart. From the low, wanted to show you this from the low. Here, we broke this trend line, this uptrend line. We have another uptrend line broken, and now this here, this is this morning, the overnight session. Flash China PMI caught the 200 period moving average. So 1820, 1817 here is our numbers are going to be key for today. We need to look at this 1817 low is going to be a pivotal low for today, for trading for today in the E-mini S&P contract. So watch it. If we take out that 18, you're going to really see the next stop is really 1797, 1800 here. That's going to be my number. So if we lose this, look for 1800 as the next area of support in the E-mini S&P. Okay, and this is S&P moving higher. We have gold moving higher, and we have obviously TLT, which is the ETF for bonds, actually stabilizing here, moving slightly higher to sideways, but should be really moving lower, as well as gold, while equities are moving higher. But as you can see, we've never recaptured this uptrend line. So again, the S&P is still vulnerable for more downside price action, and that's what we need to be aware of here. Spiders, as you can see, outside day reversal. Now we're back up into these areas here, just like if I mentioned, I showed you the cash. So we do have double topping patterns here. Okay, not really what I'd like to see, but again, to me, I think we see some further weakness, and we could be selling rallies today. Unless obviously something happens. We do have some economic data coming out this morning. Maybe that might change things. But as of right now, be looking to sell rallies. Here is the biggest red flag is the transportation sector. Yes, crude oil is moving higher. That does affect transportation stocks. However, major distribution bar yesterday. Outside day reversal from the previous day from the engulfing candle. We are basically clinging to this uptrend line. If we lose this, then you're going to have this horizontal area. And remember, look at the volume patterns. We have a thin zone here, so that should easy flush down to the 124-ish area. Okay, that is not a good sign. If we continue to see weakness in the transports, look for further weakness in equities. Russell, all it's doing is back testing this bearish rising wedge like I showed you the last few days, and it also put in an outside day reversal. Okay, not really good. This is definitely not what we want to see if we're a bull to see higher prices. So again, an outside day reversal, back testing the bearish rising wedge. This to me is a sell signal in the Russell. Qs, same thing, outside day reversal in the Qs. Pretty much everything across the board really took it on the chin. Diamonds, the weakest of the 5 indices that we follow, and as you can see here, we are now below the 50-day moving average, and it can't even get back above where you see the other indices back above, close or near their highs. The Dow Jones can't even make it above there, so definitely the weakest of the 5. Okay, GLD caught that 200-day moving average. No trade in GLD anymore. So if you were long it, you should be out of it. I wouldn't be holding through any pullbacks. Gold and commodities, guys, and commodities in general have a history of nasty reversals. Remember that, whether it be to the upside or downside. So if you're long gold and silver on that idea that we had back in I think it was early January, you should be out of it right now, and as well as crude oil. Okay, USO, even though it's trekking higher, either you trail your stops or take your profits. But this here, to me, 37 and 38 really could be the next target here. Had a great run outside of his Bollinger Bands, so it is a bit extended, so looking for a little bit of a pullback here in USO. And then we will wait for the next opportunity in gold and oil. Oil and gas exploration stocks doing quite well. Like I mentioned many times in the Morning Call newsletter, I do love the exploration and the oil services stocks for further to continued further move higher. I like I do like the ETF, and again, dial down to the ETF, look at the top 10 holders, and pick the best 2 or 3 charts, and then look to trade it. XLE doing the same thing, retesting this bearish rising wedge. Now it is on a sell signal, but I rather look for a base and look to buy stocks in this ETF. And remember, guys, we have seasonal strength in crude oil and oil stocks up until May when the driving season starts. Here's the home construction, home building survey. It was weakest in years. I think it was since 2009. So any weakness, but in the home construction or the builders should be bought. And again, not just 1 or 2 days. Let it really come in. If the market can really, give us a sell signal this here, I'd like to see this pull back a little bit more into the 50, even lower, and start really accumulating some of these high quality builders like Lennar. Here's Pulte. Here's a 3 I really like: Lennar, Pulte, and of course KBH, as we all know. Really hasn't gone anywhere. This will be the stock that will explode more than the other 2, because it's building a bigger base and there's a major thin zone here in volume. So as fast as it comes down, as quickly as it would go back up again. So those are the 3 that I really, really like. XLF and the banks, I do like them for further strength in 2014, not now. If you're long it, you want to hold through it, that's one thing, but you can see Citibank just literally now below the 200-day moving average. Fund managers will be selling Citibank because it is below the 200. That's just the way it is. So I would see your next area really is going to be this little horizontal area, 47.47, and probably going to retest the lows here at $46. Stay away from Citibank. Very, very weak at the moment. And again, if you were long it up in here and you held it and you thought maybe it might be coming back, I would literally be getting out of Citibank or putting on some protection against it. JP Morgan, same thing. As you can see, the trend is the same in all of these ETFs. Goldman Sachs moving lower. Not as bad, but Citibank is definitely the weakest of the bunch of what we're following here. And lastly, of course, is Apple. Again, I wouldn't touch it here. I'd be looking for some sort of a pullback, a higher low from this previous low, and then it would be easier to manage. But let it come back in a little bit more. Maybe fill this gap area before you look to get in Apple again for further for further movement to the upside here. Okay, all right, guys. Just wanted to kind of make sure we all know where the broader base markets are, and as you can see, the worldwide markets are, and our markets as well is at an inflection point here that it's either going to move higher and break out. And I think we're going to really need a catalyst for that. And I don't think we're seeing that right now. We've had some pretty much poor numbers coming out of our economic numbers, and to me, that's something that it's either going to take either some talk from the Fed to push this markets higher, or we would see a little bit of downside pressure, which is normal, and I think it's good for the markets to actually come in. I mean, we were only down, I think, at one point about 5% in the market. We haven't had a good 10% pullback, and I think in probably about 12 or 14 months. So it's good to have a healthy correction where then you can build up some good positions for some further movement to the upside. All right, guys, let's see what happens today. Definitely going to be interesting today. Have a great day. We'll speak to you tomorrow. Take care.